Janet, tell us a little bit about, you've been in your practice for over 30 years, and,
Yes.
you've just, what I know about you and what I've learned from you from a tax side is remarkable. You are truly a practitioner of perfection. Tell us a little bit about what it was like for you transitioning from being basically a staff accountant, CPA, to becoming a partner and then developing it into your own company.
Okay. Well, I started back in the mid '80s, also right out of college, and I actually made partner at 28.
Oh,
So
nice.
there wasn't a big like transition. I was kind of ambitious, motivated when I started. I knew my end plan was to be a partner in a CPA firm. Um, I think the change, where it came from is initially in my younger days, my plan was to be a partner of a larger CPA firm, a big group, maybe 50, 80 people, multi-office kind of thing. And then as the years went by, I realized I had a passion to develop relationships and to have this one-on-one type with the clients and sort of business but family kind of feeling. From that
Yeah.
standpoint, I wanted to be large enough to be successful and to provide for them, but to also be small enough that we could again could have that, as you had said, the relationships and the accountability to spend quality time with each client and not just be just numbers.
Yeah.
So that was where I switched over in '92. Came up here to Roswell and merged in my partnership with another larger firm. And then in 2001 is when I made the transition to start my own firm, which was
Okay.
a smaller, kind of going out on my own and starting the continuation of where I am now. So.
And do you feel like that the models that you were a part of from the early on partnerships, um, a lot of times people will look back at their parents and say, well, I don't ever want to be like that at all. So therefore they kind of model their life to be different from their parents. The firms that you came out of, were they similar in that boutique feel, but yet large enough from a revenue standpoint, or did you have to kind of almost break off some of your past and say, I'm going to be different? What was that transition?
Okay. Actually, I guess I'm glad you mentioned that the person who was the senior partner of the firm that I started with back in '85 was Tony Halligan.
Mm-hmm.
Even though he was the senior partner of the firm, I think he kind of was my mentor and molded a lot of what I am today. Was from that, seeing him with the clients, watching him, the way he worked with his clients and the way they just loved him and created this bond that was hard to quantify or just wanted something there. And that actually I'm proud that longevity that now 35 years later I have clients that started with me when I was a staff accountant.
Yeah.
Back in '85. And now I'm doing, now their grandchildren are coming. And, family business, and it grows, and I grow with them, and we get to see that evolution of their business as they grow
Yeah.
and retire and pass on to others and pass down. So it's like, I enjoy that.
Yeah.
Mm.
That's it's got to be rare. I mean, I imagine CPAs would aspire to that, but for it to be as authentic as that is, that's great. What's the biggest challenge in keeping your business that way? I mean, you've got to have at this point hundreds of clients. How do you manage that?
The biggest challenge is time.
Yeah.
Like being able to, just spread myself thin enough to be able to do that, and finding that balance of having being large enough to be able to serve and all of the clients that that need that and want that service, and bringing on new staff and training them and explaining the philosophy, the attitude, and
Mm-hmm.
having other people to in the practice to carry that on and to be able to grow and still maintain that type or that level of service. I think that's the challenge. I mean, and that sense of kind of wanting to personally be involved in it, micromanaging everything and knowing where to draw the line.
Yeah. Both of you guys run businesses that are very dependent upon your, who you are. How is it, or, do you, and Janet, more for you right now, and Brett, we'll come back to it if you want to kind of tap into this question, but the question of building a business where you have people underneath you and you manage them to kind of allow you to do more with, with more clients, but, touch it. How do you deal with that from a delegating to somebody to handle something as delicate as their taxes and that relationship?
I think the process that we found that works was first, finding a partner, like Lynn, who shares my philosophy, and that that we're in sync with our goals of how we want to manage the firm, how we want to relate to the clients, what we're trying to achieve, and then from there, just a team. I think we've found by trial and error that the thing that works best is to have a team assigned to each client, so that we're working at some level. Each of us are working with the client on, providing the service that they need, and then doing, the push down for the more, like we used to call it, the grunt work, back in the lower, level stuff to be done by the staff accountant, but still try to, manage the team so that everyone's doing for the client what they do best.
Yeah.
And as we get older, I'll say this, one of the things that the younger people do that we don't do it quite as well is the technology. So by having a team around us, we all work to our strengths and provide the client the best possible service by everyone bringing their unique gifts to the
table.
To the table to service that client.
Yeah, it's nice having multiple perspectives, especially when you're dealing with business owners.
Yeah.
And the way that you guys do, to have the ability to have someone else in the room that may see things totally differently, to add in their 2 cents,
right,
could help that, in some, big or small way. During this tax season, so much has changed with the tax law recently. What are you finding are the biggest, what do you think the biggest changes are? And what are people doing about it? What are you doing differently based upon what we're dealing with?
The biggest changes, as with the new tax law changes.
Yeah, I've got tons of questions for you on this.
It's like out with the old, in with the new. This is the biggest change in 30 some odd years.
Yes.
The last time we had a change remotely of this caliber was back in '87, right after I started. So this is like a career change for those old enough to remember the '87 reform. This is like a major.
So
it's just a whole turnover. The forms look different.
Oh,
all of the rules are different. Everything is pretty much everything has changed. It's all different.
Okay, so where do you begin, right? Where are some, I think I'm an S Corp, and so I look at some of those changes. Is there a certain area that you feel like is like something that everyone should be learning about right now in this podcast, as far as the changes, what to do differently?
With small business, with small business owners, a big deal is entity selection, which was always an issue, but even more so now because there's so many with the new tax law changes and what we'll call the Section 199A deductions, where small business owners can get, generally can possibly get a 20% deduction of their income, which puts them on kind of even footing, gives them an advantage that the larger C Corps are getting with the lower tax rates. So there are certain rules, limitations, and past issues that you have to go through to figure out if you qualify and how to maximize that.
Are you talking
figuring out the type of entity is important from a standpoint of how much how much you may be able to deduct under these new laws, being able to manage your Social Security tax and how much you're going to be able to, being able to save taxes in that arena, and other, sell, how much whether you want to put money away for retirement. There's all these different considerations. So you have to kind of interview get to know the client, get to know
Sure.
their goals, where they are in life, what they're trying to achieve, where they are now, where they want to go, and then help them figure out how, when, and to how to operate as a partnership, an S corp, just straight up sole proprietor.
So let's for the listeners to understand, there's different entities. Quickly, just run through the entities, and let's talk about the difference between a sole proprietor and an S corp, which are kind of the initial steps. If you're not even a partnership could be within that realm. But let's focus on that side, and then we'll move up if we need to into the C corp.
Okay. Well, I find that most people, when they decide to go out, leave the corporate world and start a business for themselves, they'll start as an LLC.
Mm-hmm.
They'll get an attorney to do it, or they'll go themselves to the Secretary of State's office and they form their LLC. And that's where people come into is really confused, because they think that's the end of the story. Oh, I'm an LLC. But as an LLC, you can be a sole proprietor, you could be an S corp, or you could be a partnership.
Mm-hmm.
If you are an LLC, if you start as an LLC and you're just one person, you're the one owner of your company, then you default as a sole proprietor. For income tax purposes, your entity is ignored, and you're just a Schedule C on your personal tax return. If you you can make an election as a single member LLC. You could make an election to convert your LLC to an S corp, in which case now you have a separate entity. It's a flow-through entity, generally doesn't pay tax.
And a flow-through means
it
what?
flows through and comes back via a K-1 back to your personal tax return. But you do file a separate Form 1120-S. Now you're in a new world, because as a sole proprietor, you really didn't have to do double entry accounting. You could focus on your P&L and just put your income and expenses on a Schedule C on a personal return in a simplified method. With an S corp, now you've got to do bookkeeping. So for sure, if you haven't already, with the sole proprietor deal, you really need to get QuickBooks or some sort of bookkeeping package, and start to track your debits and credits, income and expenses, and look at your balance sheet and your capital, and have a set of books. You file a separate tax return.
Sure.
And then you also have to do payroll. If you have no other employees, as an S corp, you are an employee now you're an employee of your company.
Right.
You have to pay yourself a salary, so you're in the world of payroll compliance. And then you have to there's a need for planning to analyze and consolidate your personal back to the business, and figure out the optimum way to manage money funds back and forth.
Yeah.
So it gets more complicated.
A lot more complicated, but now
but
from a tax standpoint,
for tax savings.
Yeah, let's talk a little bit about what that means this year for taxes. So what's someone who's a sole proprietor, what are the benefits from a tax standpoint, or the negatives, and then the S corp? Because the reason why you'd want to be an S corp is usually because of taxation.
Right.
And there's other, you kind of elevate your business, but at the same time, what happens now with our new tax laws?
Okay, with the new tax laws, before the new tax laws, back in the prior to 2018, you wanted to be concerned about, as an S corp, you wanted to make sure that you were paying yourself a reasonable salary, and therefore you wanted to, manage that reasonable salary and decide, if you want to keep it as low as possible, because you want to pay the least amount of, you only pay the Social Security tax on the portion that you declare as W-2 wages to yourself. So that was where you have a potential to be able to save some Social Security tax. If we use for easy math, if you've got an entity a sole proprietor that makes $100,000 as a net income after expenses, and as a sole proprietor, they would pay 15.3% Social Security and Medicare on that 100,000. Their Social
Yeah.
Security tax alone would be approximately $15,000, and that's before you get to the federal and the state income tax. Okay, so as an S corp, you only paying yourself a salary, the S corp wages are not subject to the Social Security tax. You only pay the Social Security tax on the portion you declare as a salary. So what if you declared your salary at say a third of that, or $33,000? Now you're looking at roughly, $5,000 of Social Security tax versus $15,000. So there's a potential to save
Right.
there. And then with the new tax, the new Section 199, the small business deduction.
Yeah.
As an S corp, you would get your 100,000 minus your salary left, say 65,000 left. That number times you could potentially, depending on the type of business you are and how much your other income subject to other testing limitations, possibly get a 20% deduction of the net income after your expenses and after your salary.
So an S corp can get 20% deduction. That's not just like a standardized $20,000.
It's not right, and it's not there again. There's you would need to talk to your tax advisor, and they would have to look at your entire financial picture and go through several tests to get to that deduction. And then also as a Schedule C sole proprietor, you're still entitled to that deduction under certain circumstances. So
Right.
there's also, again, that's where you got to run the test, because depending on what your other income is, what your adjusted gross income is, what the type of business is, multiple factors,
Sure.
it may or may not be more advantageous for purposes of getting that deduction to be a Schedule C versus an S corp. That's why this is the year that it's really important to work with a tax professional and have them run those numbers and do that analysis to help you make the determination.
Yeah. So it
of
sounds
what's
like
best for you.
it's almost like the way you just described it, I feel like it's unknown whether or not this year the tax changes were better or worse for small business owners.
Yeah, and it depends. It's that famous. It depends.
Yeah.
Everybody's situation is different, and for some people, it's a major benefit. Other people may possibly find that they're paying a little more, or that there's a little change. It just
I've
all
heard
depends.
a lot of frustration
A
coming
lot of
from
frustration.
online and everywhere else about this is really hosing me.
Yeah.
That people are getting hit with taxes they just didn't see coming.
Yes.
Are you finding that as well in reality, or is it just an online
I'm finding just a lot of
commentaries?
confusion. A lot of people just are not aware of, the extent of the changes. And it's like in one case they may lose a deduction here, but they gain over their tax rates less overall. But where this deduction went away, alt men maybe went down. Something by the time you put it all together, it's always like it's a crapshoot as to how they.
Sounds like
finally.
this is a good year to have somebody look at it overall,
Right.
because they may be frustrated because they're doing their taxes the same way, and they're missing something that is going to offset
Yeah.
where they
And-
may be getting
right.
hit.
And this is the year you got to learn to be, and it's hard for accountants, but we have to learn to live with some uncertainty.
Yeah, it's so frustrating. It seems like they made that change, and then no one really had a chance to understand it, and then we all just have to pay for the fact that there was all that uncertain unknowns.
Right.
I mean, how are they? I mean, I don't want to sit here and get onto a rant, but how are they going to put us in that position to where no one knows? It's kind of like, well, never mind. It's just seems strange that they would. None of us had a chance to really evaluate what we should be doing in order to best position ourselves, and we just kind of.
Well, those are, if you were, working with a good accounting firm, a CPA, you should have started back in 2017.
Yes.
Before you got to 2018, and you're being reactive or just taking
Right.
it.
So that's and that's where I really
doing
wanted.
the planning, that's where
Yes.
your team of professionals could help you because planning and strategizing is more important than ever now to make sure you're positioning yourself to take advantage of
And that's really the value of working with someone like you over like just waiting to do TurboTax or something.
right.
Is that the
Then-
odds are that having someone that you are interacting with on a regular basis, you're going to be told what to do,
Right.
you know, ahead of time.
And,
You're going to be able to make adjustments. But by not, and that's what people don't understand, is really having, as a business, developing that team around you, even whether it's on a fractional level or whether it's within a professional relationship with just your CPA. Having a financial team or having a marketing, you know, team, whether or not they're in-house or just part of someone you know, keeps you updated, right? Allows you to understand where things you can do to give yourself more exposure. Or in this case, the reality is, you know, someone who waited until after the year is closed out, they may find themselves where they didn't do certain things that could have had a big difference.
and then
So
you
the-
just take the take what the chips fall. Yeah.
So if I don't even have to even ask you the question now. I want to just say it out loud. Is, well, what is the one thing that you would provide some advice on for small business owners? If you were to say one thing, and I almost feel like we just hit it on the head.
I think my advice would be to put together that team. If you haven't already, to put together your CPA, and within the CPA firm, the aforementioned team that we will put together for you to service your tax, accounting, bookkeeping, compliance, all the other needs that you would have as a small business owner. But your attorney, your banker, financial advisor,
Fractional
if you
CFO,
can,
yeah.
a fractional CFO, that type of, so that all of you have advisors helping you to be successful, and so you can go out and do your operations, do what you do well, and know that these people have your back,
Right.
and that we're looking out for
They're
you.
doing it in pieces along the way, rather than having to try to. I mean, it's so often I've seen. I mean, just that all of a sudden the business owner shows up with the CPA or shows up with the accountant and says, "Here's my mess," and it's like,
Yes.
what can we do? We've got some other clients. So to have a team, establish that relationship, and then develop a cadence of
Exactly.
meetings along the way
And then
makes
when
it so
someone-
much easier. People can digest information appropriately,
Right.
and gives you that true proactive
Yes,
stance.
We
And
say
that's a
when they
place of
come in
strength.
with their, someone new business owner or someone who's been trying to do it themselves and finally realize this isn't working.
Yeah.
And they come in to meet with us. We give them what I call the ground zero, where we just
Yeah.
get the compliance caught up, figure it all out, get them into a good place. Then we can launch into the planning and the consulting and figuring out what changes need to be made and how they need to structure themselves to.
We have a mutual client, and this year they made a big purchase, and they bought a truck for the business, and just seeing the advice that was provided to them, where the depreciation was taken in such a way, really helped them out. I mean, it was a huge thing. So.
Things they're not, you may even be aware of that you don't know.
Yeah, I mean, I think it probably saved them in a big way, because I'm pretty sure they weren't ready for that one. So I know that the value of that proactive, and of course you've helped me. So
Yeah, and another way, this would be two things, but as a small business owner, you're not getting that W-2, that you're not having your money withheld from a W-2. So you're going to come out okay at the end of the year. You have to be responsible for your own taxes, and you're all excited you're making money, and you're not realizing how much of that money needs to be set aside and saved. So many times it's like a joke, that people, you tell them how much they come in with their stuff, you prepare their return, and no planning ahead of time. Someone just comes in cold, and so here's your surprise, here's your tax liability, and they're like, I have no money. That's not right. This can't be right. I don't owe taxes. I have no money. They have no money because they spend it on things that were not tax deductible, but now it's time to pay their taxes. So to have that structure as a small business owner, I encourage the client to set aside a separate savings account and keep a portion of a percentage of what they're making.
You hit on a, if I could add
so
to
it's there for their taxes.
Yeah. So, running the system that I run with Profit First, it's, we set up the 5 accounts, and, you want to pay your profit first. And you want to make sure that, your owner pay is there. You got to make sure the taxes are there too. And it's one of our segmented buckets is to make sure that every transaction, these things are built into it. Because at the end of the year, it feels so good to have to pay taxes.
Right.
Because that means your business is doing great. That means you've done the right things. And with the right tax team, you're paying only what you owe. But when you finally you can actually write that check because all throughout the year you were putting aside. It's just, it's amazing the stress that business owners have from a financial standpoint of knowing all these demands are going to be on them. And to remove those demands, using the right kind of a cash flow methodology
and if you overfund, it's better to overfund the account, and then that pleasant surprise, the happiness.
Well, that's the refund, right?
That's the small business the refund.
But the nice thing is that you were earning interest on that money the whole time. You weren't giving it to the IRS. So, listen, guys, we got to wrap up. But it's been really great, Brett, hearing about your story and just hearing how you developed your business and knowing how important accountability is in trying to get right health-wise is something that I picked up on, and obviously why I continue to fail in that arena.
We all do to some extent.
Janet, you fantastic. Like I said, you are truly the perfect CPA in my mind. I love that boutique feel. Being able to actually still be large enough to help a lot of folks, but at the same time keep that relationship. And you too, Brett, maintain that connection with your client base. It really makes you guys something special. So thank you guys so much. Anything as far as Brett goes, how can people here find you? What are the best routes for them?
They can go to betterbodiesmarietta.com.
Okay.
And go to my website, and they can check out everything about my facility, what I offer, ways to contact me. They can get to know my personal trainers and myself, and learn more about the business.
Great.
I've got a video on there that I'm speaking, and they can pretty much get a lot in a nutshell off the video.
Something else that I found just in looking for you is that you do have a way to help someone with meal plans and stuff like that.
Yeah.
Online. So even if someone isn't ready to commit to a ongoing, they can still come to your site and pick up some things to better themselves.
Now that's the gym where people come in for hands-on, one-on-one training.
Sure.
But I do the Fit Over 40 trainer. That's fitover40trainer.com, and that's where they can do it in the comfort of their own home.
Yeah.
All the workout exercise programs are developed for in-home use, so that's, like you said earlier, it's convenient, and they can do it on their own schedule, and they can choose whatever plan they want. There's 3 different plans they can choose from, and they can do a basic all the way to a gold plan.
They can introduce themselves to you, your program, and get used to things. And then, as they develop that, come into the gym. Because like you said, if without accountability, those people often fall off.
Yeah. And I'm the kind of person where, even if it's online, if somebody has questions, sometimes I'll just pick up the phone and call them.
No, that's great.
I don't spend time sitting there returning 50 or 75 emails.
Yeah.
Sometimes I'll just call them directly, and when you hear somebody's tonality and the honesty in their voice, and you can actually talk them through things that you'll never get through in emails or texts going back and forth.
Sure. So there's a lot of ways to connect with you. I'd encourage everyone to, if they're at that stage and they're willing to make a commitment, to look into it. Janet, tell us a little bit about where your practice is and how can people reach out to you during this tax time to get things figured out. And
we're located in Roswell, behind the Andretti's off of Alpharetta Highway. And,
it's the Raceway.
Yeah. And then our website is www.killingsworthspencerllc.com.
Nice. And is there a phone number? Because sometimes people are just like, I'm freaking out. I have my taxes.
We have a phone number.
I got to call somebody.
770-552-8286.
Okay. All right, guys. Thank you again so much. Okay. Really enjoyed it.
Thank you.